Picture this. You're standing at the edge of a vast ocean, watching a storm churn the waters into chaos. Waves crash unpredictably, lightning splits the sky, and yet, somewhere in that tempest, there's a lighthouse. Its beam cuts through the darkness, steady and unyielding. This is what investing in Tesla feels like to those who truly understand it. A wild, nerve-wracking journey, where the rare moments of brilliance outshine years of turbulence. Today, we're diving into the mind of Christopher C., a third-generation investor whose family legacy on Wall Street stretches back decades. His firm, C Capital, has outperformed the S&P 500 for 25 years by betting on companies like Tesla long before they became household names. But here's the twist. C doesn't just see Tesla as an automaker. He sees a symphony of innovation, a business that's rewriting the rules of capitalism itself. Let me take you on a journey through his philosophy, a philosophy where patience, deep analysis, and a biologist's eye for symbiotic relationships create fortunes in the most unexpected places. You know that sinking feeling when you're stuck in traffic, watching the minutes tick away while your gas gauge drops. Now imagine if that frustration could be transformed into something revolutionary. That's the essence of what Tesla represents to Christopher C. When he first invested in February 2020, the world was on the brink of pandemic chaos. But C saw beyond the headlines. He saw a company that had just turned profitable after years of reinvesting every dollar into the future, a business that was finally emerging from its chrysalis. "We don't chase unprofitable dreams," he explains, his voice carrying the weight of generational wisdom. "We wait for the butterfly to spread its wings. This isn't about timing the market. It's about recognizing when a company's DNA has evolved to survive any storm." Let's play a game of mental gymnastics. Close your eyes and imagine two worlds. In the first, a clownfish darts between the tentacles of a sea anemone. The anemone's poison protects the clownfish, while the clownfish waste feeds its host. Now picture Tesla's ecosystem. Electric vehicles charging on solar-powered grids, self-driving software learning from millions of miles driven, batteries storing clean energy for homes. This is his secret sauce, what he calls business mutualism. Just like in nature, every part of Tesla's operation nourishes the whole. When they slashed car prices during economic turmoil, traditional investors panicked. But C saw the bigger picture. Lower prices meant more cars on roads, which meant more data for their AI, which meant better autonomous driving, which meant... You get the idea. It's not just a company. It's a living, breathing organism. Here's a statistic that'll make your head spin. Since Tesla's IPO, 90% of its gains came from just 5% of trading days. That's like waiting 365 days to experience 18 moments of pure magic. C compares institutional investors' struggle with Tesla to trying to catch lightning in a bottle. Imagine waking up every morning as a fund manager, he muses, knowing that 95% of your day will be spent explaining why this volatile stock belongs in your portfolio. But then bam, those 13 magical days a year happen, and suddenly you've outpaced the entire market. It's a psychological roller coaster that most professionals can't stomach, but for those with the fortitude of a seasoned sailor, the rewards are astronomical. Let's talk about time machines. No, not the DeLorean kind, though Tesla's Cybertruck might give it a run for its money. C's approach to valuation is like building a temporal bridge between present sacrifice and future gain. When Tesla invests billions in new factories or AI development, their short-term earnings take a hit. Traditional analysts scream about inflated P/E ratios. But C sees something different. A master sculptor chiseling away at marble, revealing a masterpiece buried within. It's like Warren Buffett investing in Geico, he explains, his eyes lighting up. The immediate numbers look ugly, but that's just the cost of creating something exponentially more valuable. This is where most investors fall short. They're reading the first chapter of a 1,000-page novel and declaring the plot boring. Now, let's peek behind the curtain of institutional investing. Picture a room full of fund managers, all staring at spreadsheets that tell them Tesla is too expensive. They know the math. This company could revolutionize transportation, energy, and AI, but their hands are tied. Why? Because explaining Tesla to clients means weathering daily calls about stock dips, political controversies, and production delays. She shares a telling anecdote. I spoke with a manager who flat out said, "I hate Tesla, not because of fundamentals, but because he doesn't want to deal with angry clients. It's the investing equivalent of refusing to climb Mount Everest because you dislike cold weather, short-sighted but painfully human." But here's where C Capital dances to a different rhythm. While others fixate on quarterly reports, they're modeling Tesla's future like a physicist calculating orbital trajectories. Let's break down their robotaxi analysis. It's pure intellectual alchemy. They conservatively estimate each autonomous vehicle could generate $10,000 annual profit. 1 million cars. That's $10 billion in profit, value that doesn't even show up in today's numbers. We're essentially getting this future business for free, Sid chuckles, likening it to buying a Picasso for the frame and discovering the canvas is priceless. And when critics scream about Tesla's valuation, he simply smiles. They're measuring a rocket ship with a carpenter's ruler. Let's zoom out to Sid's broader investment philosophy, a tapestry woven from his family's legacy. His grandmother Ruth broke barriers as Shanghai's first female stock trader. His father Gerald built Fidelity Capital into a powerhouse. But C isn't content following their footsteps. He's forging new paths by blending value investing with futuristic vision. All intelligent investing is value investing, he declares. It's just that most people can't see value through the fog of next quarter's earnings. This mindset explains their second largest holding, QXO, a logistics disruptor led by serial entrepreneur Brad Jacobs. It's the same pattern: founder-led innovation, industry consolidation, and technology-driven transformation that Sid's family recognized in United Rentals decades earlier. As our conversation winds down, C offers a parting thought that echoes through the ages. The market's pricing mechanism isn't broken, it's just operating on a different timescale. Tesla's current valuation isn't a gamble, it's a bet on humanity's trajectory towards sustainable energy and artificial intelligence. When critics sneer that Tesla can't be worth more than all automakers combined, she sees the same narrow thinking that once dismissed Apple's potential to eclipse Nokia. Value isn't about market share, he says. It's about cash flow gravity, how much economic weight a company will pull toward itself in the decades ahead. If this journey through the mind of a master investor has sparked something in you, if you're ready to see beyond the noise and embrace a vision where innovation compounds like interest, then hit that subscribe button. Because in a world of financial short attention spans, sometimes all it takes is one lighthouse to guide you to fortune's shore. And who knows? The next time Tesla's stock surges on one of those magical 13 days a year, you might just find yourself thanking the storm for making the light shine brighter.